In the
What do we got? What do we got? What do we got?
Drew Kanaly.
Oh, yeah. Drew Kanaly, chairman of Kanaly Trust Company, who maintains the economy is better than most people think. He trusts the 2007 rally, but cautions next year is another matter. Joining us from Houston, Texas, to talk market this morning, Drew Kanaly, chairman of Kanaly Trust Company. Good morning, Drew. Thanks for being with us.
Good morning, Mark.
So you're optimistic about the short term, but not the long term?
Sure. I mean, the subprime boogeyman didn't get us after all. All the worries of July and August are behind us. And fasten your seatbelts because it's earnings season coming up.
Yeah. And you're expecting what from earnings season?
Well, the past several years, earnings have been underestimated, and they're going to be underestimated again. So we're looking for earnings surprises in this season once more.
All right, Drew, and you have a couple of top picks right now. On that list is Hess and 3M.
Yeah, and Hess, of course, is just the energy play and strong demand. 3M is the dollar and foreign sales. We've made another move. We've moved away from gold and more into emerging markets.
Into emerging markets? Hess into emerging markets, exactly how?
Well, what we've done is, for now, we're using an ETF that excludes China from the mix because we still have an overweight in China, but it's starting to look sort of pricey at this point.
And you don't like consumer discretionary, right? Retailers, stuff like that? Well,
Tiffany looks fine to us, but that's sort of the upper end of the market for sure. But the other retailers are still suffering.
All right, so you stay away from them. Do you buy Tiffany?
Sure, you buy Tiffany. It's part of the global play. They still got a waiting line in the Hong Kong store. Tiffany's going to hang in there.
I'm sorry, go ahead.
So I just want to jump in with a follow-up on that. And obviously, if Europeans coming to the U.S., they'll buy at the flagship store on Fifth Avenue because of the dollar. It is an aspirational brand. But aren't the likes of Tiffany and Coach, Drew, the exact sorts of brands that you'd start to see some pressure on if you did have an economic slowdown? Because they are aspirational. We're not talking super, super high-end. It's almost mid-high-end.
You're still talking about these global markets are pulling the wagon for everyone, from a Boeing to a Tiffany. This is part of a phenomenon that absolutely just overwhelmed these subprime worries. That's why we're where we are, and this is going to continue through the year end.
All right, and you think the economy is better off than most people think? I suppose Friday's jobs number kind of supported your view.
It did, and so what's driving the market still is we still have good tax policy, good trade policy, good regulatory policy, an improving Fed policy, and we just had a little credit worries. Now, going into next year, some of those things are going to come under pressure in this election year rhetoric.
Okay, and the Fed, you think they are done? You think they should do more? What?
Well, there's what they can do, there's what they should do, and there's what they will do. What they can do is lower rates again. The 91-day T-bill is still at 3.9 something. Fed funds at 4.25. There's a lot of room there. What they should probably do is close that gap a little bit to take some mystery out of the market. What they will do is another matter entirely. I think they're probably watching, earnings and commodity prices like we are.
All right, Drew, thanks a lot. Appreciate your time.
Thank you, Mark. Thank you, Aaron.
Drew Kanaly down in Houston.
Absolutely.